US still the best place to invest? Well, investing Tyson Mark Mobius of Templeton says no.
Right now, we're seeing emerging markets outperforming the U.S. and the world. Since the beginning of this year, we've seen this outperformance. So I think now is the time to shift out of the U.S. into other markets.
Well, here with me, Dietrich, Chief Executive and Chief Investment Officer at Fairfax Global Markets, and Julian Emanuel, U.S. Equity and Derivatives Strategist at UBS. So, to a degree, Mark Mobius is talking his own book here. He's obviously Mr. Emerging Markets. But nonetheless, Julian, do you agree with what he says?
Well, look, to be fair, this has been a positive year for equities almost across the board. The S&P is the laggard after several good years of outperformance. But the fact is, in our view, the bull market continues in the U.S., and it's a good place to put your money. You've got this great combination of low oil, low interest rates, and excessive pessimism about earnings that we're going to climb through.
You say we're going to see the bull market continue, but at the same time, the U.S. has been underperforming other parts of the world, like Asia and Europe. Do you think the underperformance will continue, so therefore maybe it would be better to look elsewhere?
Well, actually, we think there's a potential for a catch-up trade. There's a lot of risk events out there, whether it's Greece or, other ongoing geopolitical concerns. But we do think at this point it could be a time where the U.S. catches up.
What about you? Well, catching up or heading towards a correction sometime this year?
I disagree with Mark. I mean, here are the facts. Asian emerging markets, their growth is slowing faster than anyone predicted. Basically, you had the stock market in China go up 30% for no good fundamental reason. The government is doing everything it can because it fears a bubble crash. I think in the short run, this is not going to end well. And anyone is crazy to leave the U.S., which fundamentally has a strong and growing market. I agree with Julian on that. But I think investors have to understand there's a distinction between the economy and the stock market.
That's very true.
The economy, I think, is going to do better through the end of this year. I think Q1 was an anomaly to some degree because of bad weather. But the stock market is something different. It's overvalued, and I think we could see a 10% correction. I think that would be healthy. I think that would be a buying opportunity.
Summer? And what
I
would
think
be
in the summer and the fall, it could be anything. It could be most corrections seem to happen in the summer and the fall. It could be the Fed raises rates. It could be Greece exits the Eurozone. It doesn't really matter. We need a 10% correction, and that would be a great buying opportunity for investors.
We need to leave it there, guys, but thank you very much for joining us, both of you. And you can go to powerlunch.cnbc.com to get more and see what Paul and Julian's market outlook is for the second quarter. That is powerlunch.cnbc.com.